to approve his controversial $56 billion pay package at the company's annual meeting. The official results are expected at about 4:30 Eastern Time. So let's get to our mini panel to discuss what's at stake. Tim Higgins is a business columnist at the Wall Street Journal and a CNBC contributor. He's also author of Power Play, Tesla, Elon Musk, and the Bet of the Century. And George Gianarikas, he covers Tesla for Canaccord Genuity. He has a buy rating on Tesla and a $222 price target. Let me start with you, Tim. How crucial is Elon Musk to Tesla's future? In other words, if this pay package does not get approved and he goes off in a huff, what would it mean for Tesla?
Well, it's hard to imagine Tesla without him, and I think that is why for the last few months you've seen the stock kind of perform the way it's been doing. This concern that even if he was stayed there as CEO, that maybe he was going to take his biggest and best ideas for AI elsewhere to maybe his startup XAI. This company, in a lot of people's minds, is a robot company, is a driverless car company, and they want him to enact that vision. That's the gamble. That's the bet of the century.
How about you, George? What do you think? How critical is Elon Musk's presence to this company?
Incredibly critical. I mean, he is Tesla. And like Tim said, AI, as it manifests itself through full self-driving or FSD, in our opinion, is the future of the company. And what it does is it changes Tesla from just another auto OEM into a paradigm-changing company by enhancing the gross margin structure of the firm, creating recurring revenue, and really setting it apart from its competitors. And he really was the visionary behind full self-driving at Tesla. So he is incredibly critical to the company today and going forward.
I think, Tim, it's an interesting question now. If the company moves to Texas, do you think others would follow suit? And has Delaware kind of overstayed its welcome as the hub of corporate America?
Elon, in his fight, has definitely put attention on kind of Delaware's role there, but it doesn't seem to be, you don't seem to see a stampede of companies follow him. In a lot of ways, Elon's fight is personal against the court there. There's been several instances that have made him unhappy, and this seems to be the final straw. It is also not exactly clear that being in Texas is going to stop the lawsuits. We're seeing several filed in the last few weeks about kind of corporate governance issues at Tesla. So even if they do move there, we're expecting to continue to see these kind of fights going forward, including over this pay issue.
George, on that note, there's an interesting wrinkle in all this that the Wall Street Journal was talking about this morning, which is that if for some reason Tesla had to reissue the options now, it could set the company back like $25 billion. How big a risk do you think that would really be?
I mean, look, that would result in more dilution, and nobody wants that. So we think the best path forward for everyone is just to approve this pay package, the pre-existing pay package, which it appears that they'll do. And hopefully it passes through the courts. You know, I'm not a lawyer, but it appears that there's probably an easier path eventually through Texas here. And we think that's the best outcome for everyone. It's obviously the best outcome for Elon Musk, and it's the best outcome for Tesla shareholders. Because like we said, you know, this company without Elon Musk is not the same.
Let's try and put numbers on that, George, if we might. Just play the hypothetical game with me. I think people generally expect that this pay package is going to get approved, but who knows? You never know. What is the company worth if Elon Musk is a part of it? What is the company worth if he's not?
And look, so if we were to venture to guess, the day he leaves, if he does, we don't know if these are just idle threats, we would expect the stock to be down significantly. And look, you know, he's said things in the past around he wants to take AI efforts outside of Tesla. Maybe he thinks he can recreate that value at another one of his companies. We'll see. You know, but unfortunately for him, he still owns, regardless of this pay package, last time we checked, 12% of the company. And like I said, without that FSD trajectory hitting earnings, you know, in this decade, it's just not the same kind of company. There's not the same earnings power from our perspective. So what we said in our note, it feels like mutually assured destruction here. If he leaves, 12% of Tesla goes down quite a bit, not good for him. And also if he leaves and shareholders don't approve the package, it's not good for shareholders. So we feel like we've kind of met here in the middle, and mutually assured destruction, like in the Cold War, is probably going to work.